All right, so you've been looking into Warren Buffett, and you want to understand why his company,
Okay.
Berkshire Hathaway,
Yeah.
sold off parts of its stake in Ulta Beauty
Right.
and Floor and Decor.
I see.
We're going to try to help make sense of it all today.
Go.
Our main source today is an article from the Motley Fool
Right.
by John Quast.
Okay.
And get this.
Yeah.
He actually disagrees with Buffett's move.
Really?
He thinks these stocks are set to rise.
Interesting.
So we're going to look at the reasoning on both sides.
Okay.
Why Berkshire Hathaway might have sold and why Quast is so bullish.
All right. Sounds good.
Good.
Yeah, it is a puzzle, isn't it?
Yeah.
Especially when you consider that Berkshire Hathaway,
Right.
led by the legendary Warren Buffett,
Exactly.
is this massive investment powerhouse
Yeah.
known for its long-term, value-driven approach.
Exactly. It's like getting a sneak peek into the mind of the Oracle of Omaha.
Right. Each quarter, Berkshire Hathaway releases details about its stock holdings.
Yeah.
And that's what sparked this whole discussion.
Oh, okay.
It's how we know they trimmed their positions in Ulta Beauty and Floor and Decor.
Okay, so let's start with Ulta Beauty.
Okay.
A big, well-established chain
Right.
with over 1,400 stores
Wow.
selling cosmetics and beauty products.
I see.
Quast points out that some investors might assume a company that size has already seen its best growth days.
Okay.
In fact, Ulta's own projections for 2024
Yeah.
show a slight dip in net sales.
And that's where Quast's argument gets interesting.
Okay.
He's saying that even without explosive growth,
Yeah.
Ulta Beauty is still a compelling investment.
Okay.
He's looking beyond just the top-line sales figures
Uh-huh.
and focusing on their profitability,
Okay.
even when things are slowing down.
Right.
The article mentions their operating margin.
Okay.
Basically, how much profit they make on each dollar of sales is projected to be around 13% this year
Wow.
and stay above 12% long-term.
That's pretty impressive.
Yeah, especially in the retail world.
So strong profits, even if sales growth isn't through the roof.
Right.
But what makes him think the stock price will go up?
Well, one thing he highlights is Ulta's share buyback strategy.
Okay.
They just authorized a $3 billion buyback plan in October.
Wow.
And this is a bit of a financial maneuver that can really impact stock prices.
Okay.
Essentially, they're using their profits to buy back their own shares from the market.
Okay. And why would they do that?
Yeah, it seems counterintuitive.
It does.
Think of it like this.
Okay.
Imagine a pizza representing the company's value.
Okay.
If they buy back shares, it's like they're taking some slices of pizza off the table.
Right.
You still have the same amount of pizza left, but now it's divided into fewer slices.
Yeah.
So each slice is worth more.
I get it.
Right.
So by reducing the number of shares out there,
Yes.
they're making each remaining share more valuable, which can boost the stock price.
That's the idea.
Yep.
And on top of that, when companies buy back their own shares,
Yeah.
it can make their earnings per share, or EPS, which is a key metric investors look at,
Right.
grow faster than revenue.
Right, because you're spreading those earnings over fewer shares.
Exactly.
So even if Ulta's overall sales aren't skyrocketing, their
Yeah.
earnings per share, which is what really drives stock prices in the long run,
Yeah.
could still see impressive growth.
Yes.
And Quast is predicting double-digit EPS growth,
Right.
which could very well outpace the S&P 500.
Precisely.
So he's saying Ulta could offer higher returns than the overall market.
Yes.
And he's not stopping there. He also points out that the stock is trading at a historically low price-to-earnings ratio,
Okay.
or PE ratio.
Yeah.
Now, the PE ratio is basically the
Yeah.
price of the stock divided by the company's earnings per share.
Right.
A low PE ratio can often be a sign that a stock is undervalued by the market.
I see.
So he's painting a picture of a company that's making solid profits.
Buying back its shares strategically
Yeah.
and potentially undervalued.
Ooh.
He even mentions the resilience of cosmetic spending.
Right.
People tend to buy makeup and skincare products even when the economy isn't doing great.
It's true.
All of that suggests Ulta might be a good investment,
Yeah.
even if Berkshire Hathaway decided to sell some of their shares.
That's a really important point.
Yeah.
Berkshire Hathaway's decision doesn't necessarily mean Ulta is a bad investment.
Right.
It could be that their investment goals or their analysis led them to a different conclusion.
Yeah.
So,
Now let's switch gears to Floor and Decor.
okay.
Another company Berkshire Hathaway sold shares of.
Yeah.
They specialize in flooring and related products. And unlike Ulta,
Yeah.
they've seen their stock price drop about 30% from its peak.
Wow.
It's not hard to connect the dots to the current housing market slump.
Right.
New home sales are down, and existing home sales are also sluggish.
Yeah.
Which has put a damper on Floor & Decor's performance. I see.
Their same-store sales, a measure of sales at stores open for at least a year, are predicted to fall about 8% in 2024.
Yikes. That's a significant drop.
Yeah.
But even with this gloomy backdrop, Quast is urging investors not to hit the panic button just yet.
Okay.
He believes this dip is more likely a reflection of the cyclical nature of the housing market than a fundamental problem with Floor & Decor itself.
So he's saying this isn't a sign that Floor & Decor is a sinking ship.
Right.
It's more like they're caught in a temporary storm.
Exactly.
Okay.
He draws a very clear connection between Floor & Decor's sales and the broader housing market trends.
Okay.
He even includes a helpful chart in his article that visually illustrates how closely these two things have moved in tandem historically.
Right.
Basically, when the housing market does well,
Yeah.
Floor & Decor does well.
Okay.
And vice versa.
Okay. So he's basing his optimism on the assumption that the housing market will eventually recover.
Right. Right. Which makes sense.
Yeah.
But what happens if it takes longer than expected?
Well, Quast does acknowledge that possibility.
Okay.
He specifically says that if home sales start to rebound, but Floor & Decor's struggles continue,
Yeah.
then that would be a red flag.
Okay.
But for now, he's betting that the company's success is intertwined with the housing market's eventual recovery.
All right. So we've got two seemingly contrasting viewpoints here.
Yeah, it's fascinating, isn't it?
Yeah.
It really highlights that even within a particular investment style, value investing, there can be different interpretations and strategies.
It's true.
And remember, this is just the beginning of our deep dive.
Right.
We'll unpack these contrasting viewpoints even further
Okay.
and explore what it all means for you as you continue to learn about investing.
Stay tuned.
Yeah, we'll be right back after a quick break to dive deeper into these companies
Okay.
and the factors you might want to consider
All right.
when making your own investment decisions.
Sounds good.
It really does make you think about how different investors, even those who share a similar philosophy like value investing, can arrive at different conclusions about the same companies.
It's so true.
What might seem like a clear sell signal to one investor could be a buying opportunity for another.
And I think it's important to remember that we don't know Berkshire Hathaway's exact rationale for selling.
Right.
They might have a different assessment of the risks involved. Or their investment goals might have shifted.
Right.
Maybe they see more promising opportunities in other sectors.
Exactly.
Yeah.
There are so many factors that go into these decisions.
Right.
And it's not always about the individual companies themselves.
Right.
It could be part of a broader portfolio rebalancing strategy.
That's a good reminder that investing isn't just about picking winning stocks in isolation.
Right.
It's about building a portfolio that aligns with your overall goals.
Yeah.
Risk tolerance and time horizon.
Absolutely. And this is where diversification comes in.
Right.
Both Berkshire Hathaway with its vast portfolio and John Quast in highlighting these two companies in seemingly different situations are demonstrating the importance of spreading your risk.
Yeah, so even though Berkshire Hathaway sold some of its shares in Ulta Beauty and Floor & Decor, it doesn't mean those companies are doomed.
No, not at all.
It just means that for Berkshire Hathaway, those investments might not have fit their strategy at this particular time.
And that's perfectly fine.
Right?
It's important for you as an investor to develop your own framework for evaluating opportunities.
Right.
You've been studying Warren Buffett's methods,
which
is a fantastic foundation.
Of course.
But as we've seen today, even the Oracle of Omaha makes moves that others might question.
It's true.
The key is to understand the reasoning behind those moves and apply those insights to your own decision-making process.
So let's talk about Floor & Decor a bit more.
Okay.
They're still a relatively young company with ambitious growth plans.
Right.
They currently have 241 stores across the U.S.
Wow.
But their long-term goal is to reach 500.
Ambitious.
Even though their expansion has slowed a bit due to the housing market downturn, they're still planning to open 25 new stores in 2025.
Right. And while their same-store sales are expected to dip this year, they're taking steps to maintain profitability by cutting costs.
Okay.
Their profit margin might be lower than in the past.
Yeah.
But they're still making a profit, which is crucial in a challenging environment.
It's like they're tightening their belts and weathering the storm. They're making sure they're in a strong financial position to capitalize on the housing market's eventual rebound.
And that brings us to a key point that John Quast emphasizes.
Okay.
The cyclical nature of the housing market.
Right.
It goes through ups and downs.
Yeah.
And while the current downturn is painful for companies like Floor & Decor, it's not necessarily a sign of long-term decline.
Okay, but what if this downturn lasts longer than expected?
Yeah, that's a great question.
Or what if something fundamentally changes in the housing market? Like rising interest rates, making homeownership less affordable for a large segment of the population.
Right.
How risky is Floor & Decor's strategy of essentially waiting for the market to turn around?
That's a great question.
Right.
And it's certainly a risk that investors need to consider.
Yeah.
If the housing market slump persists.
Right.
Or if there are structural changes that dampen demand for new flooring.
Yeah.
Then Floor & Decor's growth prospects could be significantly impacted.
It's true.
It's crucial to weigh those risks against the potential rewards.
Right. It's a reminder that no investment is without risk.
Exactly.
And it's up to each individual investor to decide how much risk they're comfortable taking on.
Exactly. And that's why doing your own research and developing your own informed perspective is so important.
Right.
Don't just rely on what others are saying. Even if it's coming from someone as respected as Warren Buffett.
Right.
Or as seasoned analysts like John Quast.
So we've got these two contrasting viewpoints on Floor & Decor.
Yes.
Berkshire Hathaway seemingly taking a more cautious approach by selling some of their stake, while John Quast sees an opportunity for long-term growth.
Right.
How can our listener make sense of this seemingly conflicting information?
I think it comes down to a few key things.
Okay.
First, understand the cyclical nature of the housing market.
Right.
It's been around for a long time, and it will likely continue to go through cycles of boom and bust.
So don't panic just because things are slowing down right now. It's important to have a long-term perspective.
Exactly. Second, consider Floor & Decor's specific strengths and weaknesses.
Okay.
They have a strong track record of growth, a differentiated business model.
Yeah.
And they're taking steps to manage costs during this downturn.
Right.
But they're also heavily reliant on the housing market.
Right.
Which can be volatile and unpredictable.
And third, think about your own risk tolerance and investment goals.
Yeah.
Are you comfortable with a company that's facing some near-term headwinds, but has the potential for significant long-term growth?
Right.
Or do you prefer a more stable, predictable investment?
And this is where it gets really interesting. Yeah. Because it's not just about the numbers and the financial analysis.
Yeah.
It's also about your own gut feeling and your belief in the company's long-term prospects.
It's that intangible element of investing that can be so hard to quantify.
Yeah.
But is often just as important as the hard data.
Absolutely.
So while Berkshire Hathaway's decision to sell might make some investors hesitant, John Quast's analysis suggests that there's more to the story.
It's a perfect illustration of how there's rarely a simple right or wrong answer in the world of investing.
It's true.
What's right for one investor might not be right for another.
And that brings us back to the importance of being an informed and engaged investor.
Yes.
Do your own research. Consider different perspectives.
Right.
And ultimately make decisions that align with your own unique investment goals and risk tolerance.
We're going to shift gears now and take a closer look at Ulta Beauty.
Okay.
Exploring their business model, their growth prospects.
All right.
And why John Quast believes they're a compelling investment despite Berkshire Hathaway's decision to sell.
Stay with us. We're back, and now it's time to focus on Ulta Beauty.
Okay.
We've already touched on some of the reasons why John Quast is bullish on this stock.
Yeah.
Even though Berkshire Hathaway decided to sell some of its shares.
Right.
Let's dig a little deeper.
All right.
And see what makes Ulta Beauty tick.
One of the things that makes Ulta stand out in the retail landscape is their unique approach to beauty.
Okay.
They offer a wide range of products, from drugstore brands to high-end luxury lines, all under one roof.
Yeah, I've been to an Ulta store, and it's pretty impressive.
Oh, yeah.
It's like a beauty wonderland.
It is.
You can find everything from mascara to hair care products to fragrances.
Yeah.
And they have a salon in there, too.
Exactly.
Wow.
And that's a key part of the strategy.
Okay.
Creating a one-stop shop for all things beauty.
Right.
It's convenient for customers.
Yeah.
And it allows Ulta to capture a wider share of the beauty market.
And that brings us to another point Quast makes. The resilience of consumer spending on cosmetics.
Yeah.
Even during economic downturns, people tend to keep buying beauty products.
Right.
It's what economists call the lipstick effect.
Oh, yeah, I've heard of that.
The idea is that when people feel uncertain about the economy,
Uh-huh.
they might cut back on big-ticket items,
Right.
but they'll still indulge in smaller luxuries,
Yeah.
like a new lipstick or a face mask.
It's a fascinating phenomenon, isn't it?
It is.
It speaks to the emotional connection
Right.
people have with beauty products.
Yeah.
They can provide a sense of normalcy and self-care during challenging times.
So Ulta Beauty has this diverse product offering, a convenient shopping experience. Right. And they're operating in a sector that tends to hold up relatively well even when the economy takes a hit.
Yeah.
But what about their growth potential?
Okay.
We mentioned earlier that they're projecting a slight dip in net sales in 2024.
Right.
Does that worry Quast at all?
Well, it's definitely something to consider.
Yeah.
But Quast believes that Ulta still has room to grow,
Okay.
both in terms of expanding their store footprint
Uh-huh.
and increasing their online presence.
Okay.
They're opening new stores,
Yeah.
and they're investing heavily in their e-commerce platform.
Right, because these days it's not enough to just have physical stores.
Yeah.
You need to have a strong online presence as well.
Absolutely.
Yeah.
And Ulta's doing a good job of adapting to the changing retail landscape.
Okay.
They're also focusing on building relationships with their customers
Uh-huh.
through loyalty programs and personalized recommendations.
It's all about creating that sense of community
Right.
and providing a personalized experience, which is something a lot of consumers are looking for these days.
Exactly. And that can be a powerful driver of growth.
Yeah, okay.
Even if the overall market for beauty products isn't expanding rapidly,
Mm-hmm.
it's about capturing a larger share of the existing market
Right.
by providing a superior customer experience.
So we've talked about Ulta Beauty's business model, their growth prospects,
Yeah.
and the resilience of the beauty market.
Right.
But let's go back to this idea of share buybacks.
Okay.
Quast really emphasizes this as a positive sign for Ulta Beauty.
Mm-hmm.
Can you explain why share buybacks can be such a powerful tool for companies?
Of course, as we discussed earlier, when a company buys back its own shares,
Yeah.
it reduces the number of shares outstanding.
Right.
This can have a few key effects.
Okay.
First, it can boost earnings per share,
Mm-hmm.
which is a key metric that investors use to evaluate a company's profitability.
Right.
When you have the same amount of earnings spread over fewer shares.
Right.
Each share represents a larger portion of those earnings.
Right.
It's like concentrating the value of the company into fewer slices of the pie.
Exactly.
Yeah.
And second, share buybacks can signal to investors
Haha.
that the company believes its stock is undervalued.
Go.
If a company is willing to use its own cash to buy back its shares,
Yeah.
it's essentially saying, we think our stock is a good deal right now.
So it can be a way of boosting investor confidence
Right?
and potentially driving up the stock price.
Precisely. And third,
Okay.
share buybacks can be a more tax-efficient way to return value to shareholders compared to dividends.
Okay.
With dividends, shareholders have to pay taxes on the income they receive.
Right.
But with share buybacks, shareholders only have to pay taxes if they decide to sell their shares.
Okay.
And even then, they're only taxed on the capital gains.
So there are a few different reasons why companies might choose to buy back their shares.
Right.
And it can be a positive sign for investors.
Yeah, it's something to keep an eye on
Okay.
when you're evaluating a company. Absolutely. And it's just one example of the many things to consider
Right.
when you're making investment decisions.
Yes. There's no one-size-fits-all approach.
It's true.
What matters is developing a framework that works for you
Right.
and being willing to do your own research.
Right. Don't just blindly follow someone else's lead.
Uh-huh.
Even if it's coming from a legendary investor like Warren Buffett.
Right.
Take the time to understand why they're making certain decisions.
Yeah.
And apply those insights to your own situation.
Exactly. And remember, investing is a journey,
Yeah.
not a destination.
It's true.
There's always something new to learn.
Yeah.
And the market is constantly evolving.
So as we wrap up this deep dive into Ulta Beauty and Floor & Decor,
Okay.
what key takeaways should our listener keep in mind?
First, remember that even within a particular investment philosophy,
Okay.
like value investing,
Yeah.
there can be different interpretations and approaches.
Right.
What might seem like a clear sell signal to one investor could be a buying opportunity for another.
So don't get too caught up in trying to mimic someone else's strategy.
Exactly.
Develop your own approach based on your own goals and risk tolerance.
Second, understand that the market is cyclical.
Right.
There will be ups and downs.
Yeah.
And it's important to have a long-term perspective.
Yeah, don't panic just because things are slowing down right now.
Right. And third, do your own research.
Exactly.
Don't just rely on what others are saying.
Yeah.
Read company reports, follow industry news, talk to other investors.
Yeah.
The more informed you are, the better equipped you'll be to make sound investment decisions.
And above all, remember that investing should be an engaging and rewarding experience.
Absolutely.
Don't be afraid to ask questions, challenge assumptions, and constantly seek out new knowledge.
Exactly.
The more you learn, the more confident you'll become as an investor.
Well said.
Well, that's a great note to end on.
Yeah.
We hope you enjoyed this deep dive.
Yeah, thanks for listening.
And we encourage you to continue exploring the fascinating world of investing.
It's a fascinating world.
Until next time, happy investing.